Hi, everyone. My name is Milan Vaishnav. I'm the director of the South Asia program at the Carnegie Endowment for International Peace. Thank you for joining us today for a special Google Hangout to discuss a brand new report by my colleague Saksham Khosla from Carnegie India on India's universal basic income, bedeviled by the details. There is probably no issue or policy proposal that is more in the zeitgeist right now than this idea of a universal basic income. It's being talked about everywhere from Silicon Valley to Helsinki to Nairobi to New Delhi, as countries both in the developing and developed worlds are struggling with economic realities that force them into thinking about some kind of social insurance or social protection mechanism to take care of its neediest citizens. So whether it's concerns about stagnant trade, inequality, slow productivity gains, the impacts of sort of automation on the 21st century workforce. All of these things, I think, are fueling interest in a UBI, coupled with the fact that there's a lot of evidence from the economics literature on the effectiveness of cash transfer schemes, and we're seeing cash transfer schemes take off all across the world. India in particular has been a place where the idea of direct benefits transfers has really picked up in the past couple of years under the Narendra Modi government. And the government, frankly, made this a signature element of their welfare approach. So Saksham's report takes a closer look at a proposal for a universal basic income that was contained in the Economic Survey of India, which is the government of India's annual flagship report that's produced by the chief economic advisor, in this case, Arvind Subramaniam, and it came out last year. And Saksham sort of looks at, it sort of offers up a critique of the survey's proposal, looking at some of the pros and cons, and spends a lot of time thinking about the kind of political economy pitfalls and challenges if India were to move to implement such a scheme. And so I'm going to hand things over to him in a second. Before I do, I just want to mention that we're joined today by two distinguished commentators who are going to offer their own reflections on the report. From New Delhi, we have Rinku Murgai, who's a lead economist with the World Bank. I think anybody who has read the literature on India's attempts to deal with poverty reduction, the political economy development, has had to reckon with Rinku's work over the past several years. She's a noted commentator on many of these issues. So thank you, Rinku, for joining us from New Delhi, even though it's late in the evening there. And here, closer to home in Washington, we have Justin Sandifer, who's a senior fellow at the Center for Global Development. Justin is notable for writing on everything from the politics of African development to a trenchant critique of how the World Bank operates, to questions of development and cash transfers in the Indian context. His work, his advice has been a crucial input actually to several Government of India economic surveys going back the last couple of years. So thank you, Justin, for joining us. I'm going to turn it over to Saksham now. Saksham, if you could just provide us with a brief overview of the report and some of the main sort of findings, and then that'll be the jumping off point for us to get into a deeper discussion. For those of you who are watching online, you can add your comments on YouTube or on the Google Hangout or on Twitter using the hashtag UBI in India. And during the discussion portion, I will take some questions from all of you guys. I'll just ask my fellow co-panelists that when you're not speaking, if you could just mute your mics so we minimize the kind of interference. Over to you, Saksham.
Thanks, Milan. Thanks so much for putting this together, and for both of you, Justin, and thank you for joining us. So what I'll do is I'll just basically sort of jump in to what the rationale behind putting this report was, some of my big findings, and sort of what I see as the path going forward, both for this idea as it should be implemented and some of the bigger concerns it raises more substantively when you think about its place within the broader realm of Indian social protection. So what is the universal basic income? There are a few core sort of elements that are incorporated within that broad idea, which gets translated in many different ways depending on what you see as the utility of the idea. It is an unconditional transfer, which means that there is no eligibility requirement or any sort of bureaucratic hoops that any beneficiary would need to jump through to receive the transfer. Unlike in-kind transfers, which range typically from, say, cattle to food to public works, this is essentially a cash transfer. And the idea is that you would receive this transfer, whether it is annually, biannually, monthly. You would receive that in your bank account as a check or a cash transfer. And this is universal. So that's the sort of big selling point, in the sense that whether you're rich or poor, there is no certain distinction made in terms of eligibility. So unconditionality, sort of a periodic transfer, and one that's in cash, these are the sort of constituent elements of a universal basic income. And of course, the income part's important. So the idea is that it should essentially be a transfer sufficient to cover one's basic needs, food, water, shelter, but not necessarily be something that should be enough for you to retire upon. Now, all of these constituent elements get tweaked in many different ways when you think about sort of translating this into real policy. And we'll get into that a little bit later. This is not a new idea. It's been around for about 500 years. A lot of individuals and sort of commentators have said it's sort of a sign of a crisis of capitalism. So it only comes up when things are sort of going terribly wrong within the system. And it sort of comes out of 16th century Europe, when it was talked about as a measure to curtail theft. More recently, the sort of recent avatar that a universal basic income has found itself being talked about in is sort of growing crisis of employment. As we see automation increasing, there is a certain growing threat to employment and the decoupling between income and employment. So a lot of individuals have started proposing this for a world where labor becomes redundant. Something like a universal basic income is a way to ensure that individuals receive a living wage from government. Now, based on this sort of basic idea and the rationale, a lot of development economists and sort of wonks have started thinking about whether its utility is limited to high-income economies. And the rationale for its use in a developing country context is typically that the safety nets in these parts of the world are fairly costly. They're quite nascent. They haven't had the sort of centuries that the European or the American welfare state has had to develop. And they're fairly expensive to administer. Because of all these reasons, it's quite often the case that corruption and leakage and sort of mistargeting is sort of a constituent element of these programs. This debate has hit quite close to home in India, because we sort of have a constant debate in India, and it's a constant anxiety about the efficacy of our sort of flagship welfare programs and subsidies, whether that's the PDS, the Manrega, food, fuel, fertilizer subsidies. The debate about whether these programs are delivering what they need to be has sort of always been a part of the national debate on social protection. This has sort of been enhanced in recent years, after the early 2010s, when the Aadhaar program was rolled out, which was ostensibly intended to curb leakages and misallocation and improve targeting. Of course, there's been, similar to the growing debate within most of developing economics outside of India, there's been a lot of debate within the Indian academic context about the role of cash in comparison to in-kind aid. And this is, of course, sort of grown out of the success of programs in Brazil and Mexico in the 1990s. But more recently, in sort of the mid-2000s, a lot of Indian economists and political scientists started talking about whether a direct cash transfer can outperform our mainstay public programs. So from I think the late 2000s, we've had a series of proposals, starting with Pranab Bardhan in 2011 at UC Berkeley, to implement a UBI in India. And since then, he's been joined by folks like Debraj Ray, Abhijit Banerjee, Maitreesh Ghatak, Vijay Joshi, and all of them sort of think of a UBI as essentially the sort of template of the idea. It's a universal transfer, everybody gets it. That the amount they propose varies. It can be as low as, say, 3 to 4,000 rupees per person, which is Vijay Joshi's proposal, to about 10,000 per person, which is Pranab Bardhan's proposal, which is the poverty line equivalent. And of course, the fiscal cost of that ranges from about 3 or 2% of GDP to about 10 to 11%. To generalize a little, their plans typically are intended to cure what they say is a faulty targeting within the Indian social protection framework and poor implementation. And the way they sort of seek to cure this is through the provision of universal benefits, for which you don't need to bring in your below poverty line censuses. You don't need a sort of a elaborate government machinery to administer these transfers. And now, since we have a growing financial inclusion network combined with the growing biometric identification scheme, the theorized notion is that the combination of all of these factors will ensure that a simple cash transfer can be delivered universally across India to most individuals. They have a few different ways they propose of financing these transfers, and these range from additional taxation, eliminating so-called non-merit subsidies which accrue to the affluent in India and the middle classes, and removing certain non-performing schemes. For some, this means removing the PDS and the Manrega, and for others, this means leaving those intact, but finding other sort of fat to trim within the 950-odd central schemes that we have running. So this was broadly the background until about 2016, at which point we started hearing news that the upcoming economic survey would include a chapter on the topic. Now, as usually happens in India, rumors sort of began flying thick and fast that in the aftermath of demonetization, we would have a one-time cash transfer and sort of everybody's bank accounts would see a cash infusion to ease the economic shock of the move. That didn't materialize, but the chapter in the economic survey did. Now, the survey's main idea, and it presents a series of sort of nuanced arguments for why a UBI is sort of philosophically a better performing system than what we have right now. But its broad thesis is one of administrative efficiency. And that is essentially following from what, say, Pranab Bardhan and some of the early guys who've been propagating the idea of a UBI, which is that misallocation is rife. Corruption is a substantial part of corruption in the form of both individuals that are part of the safety net that shouldn't be, and in terms of the resources that should be reaching people that are being diverted. There is leakage, and there is, of course, inefficient targeting. So many people who should be receiving these benefits don't, and many people, so we have type 1 and type 2 targeting errors, which are part of these schemes. So that is a sort of broad rationale that a UBI would sort of cut through these layers of bureaucratic red tape and ensure that all of the blurriness that you see with all of these schemes falls by the wayside. It proposes what is essentially an annual transfer of about 7,600 rupees. It has a few different modalities, which, depending on it, presents a series of options and rationales for why you want to adopt those. But the headline finding, at least, is that an annual transfer of about 7,000 rupees will bring the poverty rate in India down from the existing 22% to about 0.5%, and calculates this by basically stating that what is the consumption threshold of the person at the 0.45 level, and how much would that person need in terms of an income supplement to push them over the poverty line. Now, one interesting thing that the survey does sort of take a stand on is this issue of quasi-universality. So it isn't actually proposing a purely universal cash transfer. And it says that for a couple of reasons. It says for political prudence, and both political and fiscal prudence, it doesn't make a whole lot of sense to give that transfer to the entirety of the Indian population, given its massive size. So it sort of advocates for a quasi-universality rate of about 75% of the income distribution, which would receive this transfer. And 25% of the top of this income distribution would not. And it advocates a range of ways for weeding out that top 25%. And these involve everything from targeting a particular gender, so only sending it to women, starting in urban India, using a range of targeting techniques like community targeting, self-targeting, so on and so forth, or even the Give It Up scheme, which was used by Prime Minister Modi for the LPG subsidy. Now, with a quasi-universality rate of about 75% and an annual transfer of around 7,000 rupees, calculates that the cost of such a scheme would be about 5% of India's GDP. Now, on the financing question, the survey doesn't take a very strong stand on what should be dismantled or substituted to pay for such a scheme. But what it does is it presents India's flagship subsidies, which are the food, fuel, and fertilizer subsidies, which cost about 2% of GDP, and the 10 largest central welfare schemes, which includes the National Sanitation Mission, National Rural Road Building Network, the midday meal, so on and so forth, which are about 1.5% of GDP. And it sort of presents these in the chapter as potentially schemes that are not working anywhere close to where they should be and are possibly candidates for replacement. Now, the service chapter sort of ends by stating that the method of delivering this transfer is essentially a road that leads through one, universal financial inclusion, and two, the Aadhaar authentication and distribution framework. So this is broadly the survey's plan or the blueprint for an Indian UBI. And I think it does a couple of things incredibly well. One, of course, it's, I think, the most detailed proposal we have for an Indian universal basic income. And the fact that it's been conducted by a arm of the government. Of course, it's not entirely binding on the union government to take any of the survey's suggestions on board. But I think with the care and the state imprimatur on the idea, I think that raises the tenor and quality of the debate significantly. So all of the numbers and the pathways we see to realizing a UBI in India, I think we couldn't be able to talk about them in significantly as much detail as we can if the service chapter didn't exist. What it also does, it sort of convincingly attacks bad arguments for a UBI. And this involves things like labor disincentives and temptation spending, which the survey sort of authoritatively dismisses. We have, because of the sort of broader turn towards cash and development, a substantial evidence base at this point to say that labor disincentives and increasing spending on things like tobacco or alcohol is not a risk that we should typically prepare for when we're going for such a transfer. Having said that, there are several issues with this proposal that sort of tell you a little bit about the many risks that lie in converting what seems to be a great idea on paper into something that is both politically workable and can be implemented by India's bureaucracy. And what that ends up meaning is that this is a proposal for something which is neither entirely universal, it's not basic, nor is it an income. So I'm going to go through the big constituent features and talk a little bit about why I think that is. On the payout amount, which is about 7,000 rupees, and sort of varies depending on the point of payout, I think the survey sort of errs in, one, it uses the Tendulkar line, which is a fairly controversial measure of poverty consumption in India. The Tendulkar line was updated in recent years by the Rangarajan line, which has again sort of faced tremendous controversy in its use and application. But it does seem to set a lower base for calculating the payout. The survey also does not compensate individuals for a potential loss of consumption from schemes like the PDF or the Manrega, which would be withdrawn to finance a UBI. The survey essentially says that it is likely that a UBI's efficiency gains would outweigh the loss of these schemes, but that is essentially a probabilistic assertion and not something we can be sure of in foresight. Now, on the candidates for fiscal space, the schemes that are presented as possibly up for discussion, my sort of core concern with these schemes was, one, is that a lot of these schemes have sort of core development goals that are very different from the temporary boost of consumption that a cash transfer is meant to provide. And I think a cash transfer can be talked about in the same realm as a food, fertilizer, and a fuel subsidy. Those are essentially sort of trying to create the same outcome. But to put things like a midday meal or a Sarva Shiksha Abhiyan as up for discussion, I think begins to encroach upon the core public services that a state is meant to provide. And the survey itself is very clear about this, that the sort of core public functions of the state should not be impinged upon by a UBI. So I think when you remove some of these schemes from discussion, the fiscal space for this falls dramatically. And the survey also does not talk about things like increasing the tax base or some of the other ideas that folks have raised, like disinvestment or the privatization of public sector enterprises that may have given you some more fiscal room. On the targeting question, now the survey's quasi-universality leaves you with the question of how do you remove the top 25% of India, of the income distribution. There is a pretty substantial literature on targeting that has developed since I would say the early 80s. And so a series of new evaluations have started to find that the coarser and the simpler targeting criteria you have, it is more likely that universal or near universal coverage can help you reach the same amount of, if not greater, the beneficiary population with significantly less administrative, private costs, transaction and transition costs. So because of all of these reasons, I think that 75-25% distinction will be a sticking point because it can lead to inefficient means targeting being reimposed. So you're back essentially, we're sort of back to square one in terms of targeting a universal transfer, which is sort of a cognitive dissonance in that. And this is sort of further exacerbated. I think the SECC is the latest iteration of a poverty targeting mechanism, but again, it's been plagued by sort of data issues. So that's, of course, something that we can get into later. And the final sort of design feature is the reliance on the Aadhaar and the DBT framework. Now, several evaluations of cash for food pilots, which I think is the sort of closest system we have right now of seeing how something like the UBI would play out if it was substituted in for schemes. Several of these evaluations by folks at JPAL, MicroSave, ICRIER have found that there is significant room for improvement in terms of last mile delivery, the actual transfer size that's given to individuals, and the sort of significant private costs you have to go to spend your money now in the open market instead of receiving the ration and the in-kind benefits you already want. Now, that's with the DBT. With Aadhaar, the sort of increasing concerns about weak data security and its growing role in authentication and distribution of benefits, which has resulted in the exclusion of genuine beneficiaries, means that an exclusive reliance, I think, on Aadhaar is probably misguided, and there deserves to be a sort of a deeper cost-benefit analysis of things like maybe even using the NEFT system of the RBI, or possibly even digital payments, similar to the Kenya UBI pilot that is underway right now. So I think for all of these reasons, there is quite a lot of room for debate in trying to figure out how exactly do you go about operationalizing a universal or even a near universal cash transfer, which is why I sort of advocate for a basic income pilot, the way sort of several other developing nations are attempting to pull off right now. But I think the Indian UBI pilot should sort of have one twist, which a lot of other countries or organizations are not looking at. And that is a extensive focus on, I think, state capacity, because this will be, given India sort of size and breadth, a transfer that can only be delivered by a state agency. Unlike in Kenya, there is an NGO, which is part of the UBI pilot, or say even in California, where Y Combinator is sort of raising the funding to pull off a pilot. I think the complicated questions of finding the money for a pilot, ensuring that there are enough sort of government agencies, agents sort of running that pilot, I think that'll teach us a lot about what it is for the Indian state to run something like a UBI. And I think that is a more crucial question to answer rather than sort of what is the effect of a cash transfer on individuals in India, which is something, again, which we do not, there may be surprising findings to sort of see that. But given the sort of convergence of findings we have from comparable development contexts, the answer to that question is likely to be less variable than the answer of figuring out if the Indian state can actually pull this off. But on a more meta level, I think the debate sort of needs to start distinguishing clearly between a UBI, a direct benefits transfer, as is understood by government implementation currently, and a sort of a targeted unconditional cash transfer, which is what I think the survey essentially advocates for. Because I think these are sort of three analytically different categories with very different associated costs and benefits to both beneficiaries and the government agencies implementing them. So I think with the powerful sort of gravitational pull that we have within the Indian government with DBT and Aadhaar at the moment, these ideas can be sort of radically changed between the process of ideation and execution. So I think these are the sort of concerns that I had about the service proposal. And of course, we can talk about all of these as we go forward. But this is broadly my setup.
Thanks very much, Lakshman. That was a terrific overview, both of what the survey says, sort of the motivations for writing what you did, and some of the most powerful, I think, critiques. I want to turn to Rinku and Justin for some comments. I just want to say at the outset that our commentators are speaking only in their personal capacity. Their views do not necessarily represent those of their employers. Obviously, the World Bank and CTD are places which have a variety of views, as is the case here at Carnegie as well. Rinku, I want to start with you, just with any general reflections, but then I kind of have a larger question which has to do with, this is a proposal which doesn't exist in a vacuum. There is a many decades long constructed social protection reality in India, and we can critique how well it works or not. But I would love to hear your thoughts about a UBI in the context of kind of where the Indian welfare state is today and where it's likely to go in the years to come.
Thanks, Milan, and thanks, Saksham. That was extremely useful. I mean, the first thing that I'd say to anybody who's listening to this or who's likely to come back to this to look at this session is that you should go read the book. I mean, I personally found that there are many, many questions that I had about UBI, and most of those are issues that are addressed, that Saksham, doesn't necessarily come out with an answer, but he raises the questions. And raising those questions is incredibly important before there's a move in the direction of a UBI. It's partly related to one more comment that I'd make is I think where Saksham ends up, I fully agree with. That largely a UBI, or if you call it a quasi-universal cash transfer, whichever version you prefer, at the scale that is envisioned in the survey still remains an untested idea. So before it's adopted wholesale, there is a need to experiment, to pilot, to take those pilots seriously and learn from that evidence, which is where I think Saksham eventually comes out. Not saying that don't do a UBI, and don't necessarily debate whether or not one should have cash transfers and whether cash transfers lead to improvements in people's lives. We have enough evidence that they do, but the question really is the Indian state capable of delivering cash transfers at scale, and what would be some of the effects in society, not just on the individuals who are affected, but also in terms of what happens to who are directly affected, but what happens to labor markets and other aspects for which we have no answers. I mean, there's even the Give Directly Kenya experiment is still too small to be able to judge what would happen in Kenya, let alone in India. So I think where he comes out, I fully agree with. There are three. I was scratching my head thinking of, well, what else would I have liked to have seen tackled in this book? And one part relates to the question that you asked me as well, Milan, which is, do we have Does anyone have an articulated vision of what India's welfare state should constitute? And to be very simplistic about it, you'd think that the social protection architecture in a country should have some combination of protective schemes, some combination of preventive, and some combination of promotive schemes. So protective schemes are what are typically, people often refer to PDS and Manrega as schemes that protect households from chronic poverty. Although I'll come back to that if we have a discussion about how UBI compares to the current schemes, such as the PDS and Manrega. So if those are protective, you have promotive schemes that are around livelihood strategies. But there's a very important other pillar where India has underinvested, which are preventive schemes, essentially different forms of insurance that allow households to cope with risk. And these will become increasingly important as poverty declines, which we know has been declining, although we don't have a consumption survey after 2011-12, so it's hard to be conclusive, but at least the evidence, certainly between 2005 and 2012, suggests that there's been very rapid decline in poverty. You could raise the benchmark, so maybe Tendulkar is too low, maybe Rangarajan is where the government should set it, but it's still the case that the nature of vulnerabilities that households face has been changing. And if keeping that in mind is would UBI solve that? Would UBI, if you were to replace PDS and Manrega and other social, some of the others I won't name, which ones, since we don't have a definitive list of which schemes should be replaced, would that in itself serve all the functions of a social protection scheme? It's not clear that it would. So that's one thought. The second area that I would have liked to see developed a little bit further is what is the nature of state capacity that is needed if you're doing a UBI versus something like a PDS or a Manrega. There's a bit of a, I don't think the economic survey necessarily wants to go there, but by not tackling it, there seems to be implicit a belief that the kinds of state capabilities that are needed to deliver a cash transfer are significantly less demanding than the in-kind transfer schemes. Now, that may be the case in some dimensions. It may not be in others. So, for example, the experiences of DBT suggest that you still need a capable state, I would say, in the dimensions of grievance redress. When you use technology, it can be empowering, but it can also be very befuddling to citizens on where they should go if their entitlements are denied. What kind of state, what kinds of skills are needed? I think a little bit of development on that would have been welcome. And then the third one is, if you move to, if the main pillar of India's social protection architecture becomes a UBI scheme, what does that imply for center-state relations? If you look at the evolution of social protection programs over the last couple of decades, a lot of the improvements have come from innovations by states supplementing what the center has been doing, and by taking their own initiative to strengthen delivery architecture. So much so that many of the improvements, for example, in PDS, are coming from resources that the states have put in on their own by essentially going universal from the targeted PDS, as well as deploying ICT and other mechanisms at the state level to improve delivery. If you switch back to a UBI, what does that mean for center-state fiscal transfers? What does it mean for the way politics plays out at the state level? I think that those are big unanswered questions and will have implications for pulling together a winning coalition to build support for a UBI. Let me stop there and turn it over to you, Milan.
Thanks, Rinku. I want to get back in a second to some of the state capacity issues, because I think that's really a central theme, particularly in the latter half of Saksham's analysis. But before I do that, I want to just turn to Justin, Justin, you've thought about these issues, not just in an Indian context, but also elsewhere. You've done some work in Tanzania that's related. You follow what's happening in South Africa, in addition to the kind of debates in the United States. I would just love your kind of big picture thoughts on what do we know about UBI, or I guess the prospects of a UBI, based on what's happening outside of India and other parts of the world.
Sorry, I was speaking on mute. Thanks. And to echo a lot of what Rinku said, I mean, I really enjoyed reading the book. It's kind of comprehensive, and most of the things I think we can say here are covered if you take the time to download and read the book. But I think it is interesting to look at some of the evidence that is coming out from other contexts. Saksham mentioned that we've got a bunch of good empirical economic evidence that says, look, cash transfers don't lead to reduction in labor supply. Cash transfers don't lead to spending on alcohol or cigarettes, or the money isn't wasted on temptation goods. But we've also got some evidence on kind of growing evidence on the political economy and the regulatory challenges of some of these programs. Some of the work we've done, in Tanzania, where there is a kind of a small World Bank financed cash transfer program, nothing like a UBI, is to kind of look at polling numbers about public support for these programs. And Tanzania is a context where there's a lot of, fairly high faith in government, high preference for spending on social services, health and education, and real popular resistance to any move to some sort of cash transfer system. And so I think, we need to complement sort of our analysis, our kind of welfare economic analysis of what we think is going to be best for people with, some listening to whether or not there's popular demand and support for a switch to cash-based programming and to UBI in general. Because, one of, I think, the sort of analytical disciplines that the economic survey engaged in, which I think was nice, was to kind of talk about this in a budget neutral sense. Now, we may or may not support that as a policy. Maybe we need more social spending. Maybe we shouldn't talk about budget neutrality. But in terms of an analytical exercise, it's very useful to say, okay, let's hold budgets constant and talk about swapping out existing programs for cash. Then you really need to prove that this is better and that people would prefer this program over and above existing programs. And I don't necessarily know that case has been made in a lot of other constituencies. The South African case, I think, throws up some different sets of concerns. South Africa obviously has a large program of social grants. Again, not a UBI, it's a more targeted system, but they are large, unconditional, state-run cash transfer programs. There, it's been, an issue of relying on private intermediaries at the final stage in the banking system to dole out these payments, and having issues with private companies then garnishing people. If you give somebody a UBI or a permanent transfer, there's a real temptation in the marketplace to talk about collateralizing that flow. I'm entitled to an income from the state now. Suddenly I become a lot more creditworthy because a lender knows I have some capacity to repay if I have this income stream coming. The economic survey holds that out as a positive. It talks about the benefits of financial inclusion and credit access that could come from a UBI if people suddenly become creditworthy. The problem that South Africa has encountered is that companies kind of garnishing people's transfers, granting me a loan on the basis of my cash grant, and then when I don't pay, the company that made me the loan can just directly deduct, from my cash transfer. And I have very little redress. The same people that are lending me, the money lenders, are now the ones that control the tap of my transfer. It's raised all kinds of, it's become kind of a crisis in South Africa, and I think throws up some regulatory issues that haven't been very well addressed. Other contexts, Indonesia, Nigeria, other places where there have been conversations about moving from other schemes to cash programming. One of the constant concern issues is this element of trust in government, and that it's distrust in the government's provision of these programs that leads people to be very reluctant to move to cash-based programming. If they've seen their fuel subsidies in Indonesia or Nigeria work, if they've seen PDS work in their local community, I think that's going to provide some natural conservatism about switching to an unknown, untested program. And I think, the onus is on government proposing these kinds of changes to prove to people that they can put their faith in them.
So, building off of that point and people's faith, I want to talk about the sort of so-called jam trinity, this idea that's there in the survey, but now sort of many people talk about is, India has moved towards, trying to bring these three programs together: Jan Dhan Yojana, Universal Financial Inclusion, Aadhaar, its biometric identification scheme, and sort of mobile money, to try and deliver cash transfers to the population at large. Saksham, I want to start with you about how much can we rely on the jam trinity? Do you have a sense of kind of what the status quo is and whether or not the foundations are in place to utilize that framework for a UBI if that were to come to pass? I think you're on mute, so you just have to unmute yourself.
Milan, was that for me?
That was for Saksham, Rinku.
Okay, sorry, I got kicked out for a little while. So
That's okay.
Rejoined you guys. Okay.
No worries. Saksham, you want to respond?
Yeah, I think for the jam trinity, I mean, from the conception that you got from the original economic survey, which I think was a couple of years ago, which had mentioned the jam trinity, we haven't really seen that fully utilized in reality. So we've seen, I think it's all three things have sort of proceeded in different directions. The Pradhan Mantri Jan Dhan Yojana has sort of expanded quite dramatically. I think we're at about 300 million PMJDY accounts. And the challenge there, interestingly, is not one of account ownership anymore. We're sort of moving to the stage where we're trying to figure out, well, how do you make active use a part of the financial inclusion framework, which is, I think, fantastic. I don't think that's sort of a problem that you want to tackle because that's a second order problem. We haven't really solved the first order problem of account opening entirely. There are still some issues of account dormancy and account duplication, but that's really sort of fading away, and we're sort of trying to figure out how do you make sure that people use their bank accounts all the time, essentially. So, and mobile ownership is increasing. We've sort of crossed 1 billion mobile subscribers quite recently, but I don't see all of these three things sort of coming together to form a new benefit delivery framework. And I think that benefit delivery framework has sort of been very focused on Aadhaar authentication and now growingly the use of the Aadhaar-enabled payment system in in sort of benefit delivery. So I don't really see that particular vision being realized, but I think the focus on ensuring that Aadhaar is the framework for database collection, for enrollment of beneficiaries, for feeding their Aadhaar numbers in the respective databases of all of the different schemes that we have currently going on. That particular vision of sort of cohesive simplicity that was advocated for by the survey hasn't really seemed to materialize at this point.
Justin, just quickly on this, you made an interesting point when we were talking yesterday, and I don't know if you want to raise it again about the sort of elasticity of the current approach.
Yeah, I mean, that was something I mean, maybe I don't want to be too blasé here, but I mean, there's a lot of talk in the economic survey about whether or not the offer of a UBI, the creation of some sort of UBI scheme, would induce more people to kind of come on to adopt various pieces of the Jam Trinity. And, they did some background work trying to look at what that elasticity might be. If there's cash on offer, are people more likely to open up accounts and connect their accounts? I think actually I would be quite optimistic about the demand side elasticity here. I mean, if you even poor people in remote places, if there's going to be cash on offer, I have a feeling take up is not going to be the problem. The state's capacity to implement is a legitimate concern, but I think this worry about elasticities on the demand side seems like a strange bit of concern for me here. I mean, I think it's worth coming back. I very much take all of Saksham's points, that you make there about, the functionality of the gem trinity as a delivery mechanism is really far from established. We're getting far beyond, I think, where the economic survey claimed we were. The message of the economic survey was about, this is an interesting idea which isn't really ripe for implementation yet, and that sounds a lot like what you're saying. I think the economic survey somewhat cleverly, in terms of at least a rhetorical ploy, kind of put the onus in the other direction, right? Which is to say, not does India have the state capacity to deliver a UBI, but does India have the state capacity to run the programs that it's currently trying to run? And the implicit message of the economic survey was, no, we're failing to deliver these programs. PDS has incredible leakage. Manrega is not well targeted. We don't implement well the things that we're currently trying to do. And even, kind of moderate implementation of a UBI would do better. Leakage. But I think that's the basic empirical claim of the economic survey that I think is worth interrogating. We shouldn't necessarily take it at face value. The basic empirical claim of the survey is leakage and misallocation of existing schemes that are targeted at the poor is so bad that a universal program that makes no attempt to target would actually do better at reaching the poor. It's a fairly bold claim. I don't know how much scrutiny it stands up to, but I haven't yet quite heard you say that you don't believe the claim, though I kind of, reading between the lines, think you want to. And so I'm kind of curious to see if you'll go out and say, no, I really don't believe that a non-targeted UBI is going to lead to more resources getting to the poor than the existing set of targeted schemes.
Saksham, you want to take that on?
Yeah. So I like that claim incorporated two things, right? One is what you said, that the PDS and Manrega are not delivering what they're supposed to. I think that's quite true. But I think that the picture that the survey paints is a fairly static image that doesn't take into account the sort of improvements that it has made over time. It's sort of open, of course, up to debate whether we see that trend line continuing to move forward. And the interesting thing here is that most of that has been executed as a part and parcel of a growing realization that electoral benefits ensue from improving basic public service delivery in places like Bihar, Chhattisgarh, Odisha, which have sort of been the forerunners of PDS reform in the recent years. The second sort of claim in that particular framework is that, and this is something that Rinko alluded to earlier, is that state capacity for a universal cash transfer would be an administratively lighter burden than what we're doing right now. I think the experience with DBTA and Aadhaar tells you that it's likely not anywhere close to a sort of and this is a caricature, to sort of have a completely free market paradise where you're sort of transferring benefits from state coffers to individual bank accounts. But I think it requires as much it requires restraint from government agencies to ensure that people are actually receiving unconditional transfers, and there is no sort of rent being collected and skimmed off the top of these transfers. And two is to actually build the foundations for service delivery, and that includes universal financial inclusion, along which we're moving to quite swiftly. But the interesting sort of thing that we haven't seen much experimentation is what other payment modalities do we have to ensure that verified payments are being made to beneficiaries, and a framework in which Aadhaar is not part of that framework. So I think that's broadly what I'm interested in trying to figure out is, well, do we really need a universal transfer to realize all of these benefits? Or if we take the central claim of unconditionality and universality as positive elements, can we maybe get there by universalizing the PDS or making the realm within which Narega operates sort of bigger and better? So I've sort of ended up at reaching even more open questions that I think the survey poses by looking at the evidence on all of these different constituent elements.
So I actually, this is a perfect segue because I wanted to ask Rinku this question. A question that's coming online, Rinku, is, are there things that we can learn from the redesign of existing delivery mechanisms? So whether it's PDS authentication, whether it's the Pahale cooking gas direct subsidy transfer, whether it's the direct benefit transfer for social pensions, are there lessons there for how a UBI could get implemented?
I think let me come back to that because I can't resist commenting a little bit on what Justin asked, right?
Okay.
So this question of, are we willing to, I guess he posed it to Saksham, but in general to the policy community, to say that, well, if you compare a cash transfer or a UBI to existing programs such as the PDS, will there be lower leakage? Just to put it bluntly, I think based on experiences from other cash transfer programs, that is likely to be the case. Given the current levels of leakage in Manrega and PDS, we're likely to be able to achieve lower levels of leakage. But then immediately the next question should be, is that the only objective? I mean, is the objective of the scheme purely an income transfer? Or are schemes being designed to achieve other objectives as well? Some which have to do with, for example, if you look at the PDS, may have to do with price stabilization, providing assured prices to farmers, and the whole linkage of the ration system to that can't be denied, right? So if you were to get rid of PDS wholesale, well, what would be the tool that government would have to assure prices to farmers? I mean, is the next step then to say, well, you get farmers to have UBI as well, and therefore no procurement? I mean, I think it unravels a whole bunch of questions. It raises a whole bunch of questions. I'm personally, I'm still inclined to move as close as possible to a universal cash transfer, but I think there are unanswered questions, which is the point of Saksham's book. But in coming back to, are there lessons from the improvements in existing social protection programs in India for the design of a UBI? I haven't actually. It's an interesting question. I haven't given it thought, but a couple thoughts that come to mind now are, if, for example, if you look at the improvements in PDS, they haven't been across the board, but they have been substantial in a few states. And if you think about what those states have done to improve both coverage rates as well as reduce leakage, it is in large part related to the deployment of technology. And I, like Justin, I'm actually much more optimistic about the Jam Trinity coming together and becoming a tool that can be deployed. But is it only technology? Was technology the main part of the solution? I think it was an important part, but it was coupled with other accountability tools to facilitate much greater citizen or community-led monitoring. Now, if you move to a UBI-based system, how do you incorporate that? I think that would deserve some thinking, and that is also reflective of potentially the transition problems or deeper issues that are being highlighted by the DBT experiments in the 3 union territories, where technology is being deployed, but when households are excluded, it's not obvious where they should go and how the system should be reformed. But I think the key thing that I would take from PDS reform for UBI are, A, the importance of going as universal as possible. That builds support for the program. It reduces opportunities for capture, I think. The importance of technology and using technology to strengthen the arms of citizens to monitor and demand what they are entitled to from the program.
So I can't resist, and there's a question that's come in on Twitter on this issue of savings. There is a debate going on. It's played out in the op-ed pages in India. Most recently, there was a piece by Jean Drez and Ritika Kera basically saying that this whole idea that Aadhaar has saved India upwards of $11 billion relative to the status quo is actually a myth. It doesn't exist, that this number is not backed up. So is there, I'd just be curious if any of you have views on that. Is there a danger that we are overselling the benefits of the sort of new approach versus the old approach? Or do you feel pretty confident, given what you guys have been working on and what you've been reading, that those savings are actually quite considerable? And that's to anyone who wants to take it on.
I mean, if you look at the, it's hard to see. One is sort of what you mean by when you say by savings, right? And one of the big strands in the Indian debate is whether the removal of genuine beneficiaries or part of a broader turn towards the removal of sort of duplicate or fake beneficiaries is actually something that's leading to exclusion and thereby artificially inflating savings figures. The other questions are, of course, is the process of weeding out these potentially duplicate or fake individuals processes that were, one, already in play prior to the introduction of the Aadhaar system, and two, are they dependent on processes that can be employed without the use of Aadhaar? So I think in all of these, thinking about those questions and thinking about precisely targeting what the role of Aadhaar in actually introducing and spurring all of these savings, I think that role becomes quite suspect. That's a very difficult claim to pin down. And as sort of numerous RTIs, parliamentary questions that have been answered shows, is that the provable impact of Aadhaar in sort of actually realizing these savings is fairly slim.
Yeah, I mean, I don't have a lot to add to that, but other than to say, I think this brings us back to one of Saksham's original points, in the book and in your earlier presentation, which is, what is the evidence that we need to have a more informed policy discussion on UBI in India or anywhere, really? It is less about the household economics of cash transfers and much more about the implementation arrangements and what kinds, not just, obviously we need state capacity, but what kinds of state capacity? How do we organize that? How do we do that? What are the modalities for actually implementing this? And so pilots and research that gets at that issue of what those arrangements are, I mean, I think are super important. And I'm a little bit more sanguine about the external validity of research from Kenya or Alaska or wherever it may be about the labor supply effects of cash. I'm much less sanguine about the external validity of any, study about we can run a good cash transfer program in Kenya, thus we can run a giant nationwide UBI scheme in India. No, it doesn't follow at all, right? And so I don't think we've really scratched the surface of research on whether or not this can be done effectively through government systems at scale in a way that means that the leakage that we see, and those numbers are debated, but the leakage that we see in existing programs can actually be replaced with something that does, substantially better. So to be proven, I would agree.
So we're basically almost out of time. I just want to ask two final questions very, very quickly, and I'll just ask Rinku and Saksham for quick answers. Obviously, we can go on talking about these things for a very long time. But Rinku, very quickly to you, how worried should we be about this issue of quasi-universality? That is, the economic survey proposes that we focus on the 75% of the poorest, we exclude the 25% of the richest. That then opens up a Pandora's box, according to Saksham, of all these questions of targeting and so on and so forth. How worried should we be about that?
So in my view, not quite as worried as Saksham is. I mean, I think that there are, and he's got a great review of the literature on the very, very mixed experiences with targeting. And it's not obvious that any particular mechanism of targeting dominates. But I think if you look at that literature, it's much more about how do you target the poor versus how do you exclude the rich. And certainly in the Indian context, those two are very different things. I would be based on, for example, the SECC data, which I've had the opportunity to be involved in terms of looking at the data as well as contributing to some ideas in the design of it. The pilot project that was done before the SECC questionnaire was finalized showed that while it was relatively, it was easier to figure out who was rich, it was incredibly difficult to draw a line that you had any confidence in terms of separating out who was poor or somewhat less poor versus middle class. So the middle of the distribution is very difficult to tackle. But at the top end of the distribution, if you start picking out, do you have a fridge? Do you have a two-story home? Do you have concrete floors? Those are somewhat more identifiable. Those are harder to fake. And those tend to be quite well correlated with consumption levels at the top of the distribution. I think also the challenges are going to reduce if you stick with the top end, as if this push towards formalization as well as connecting of databases and this general strategy which several state governments are also starting to follow, the more and more they push in that direction and deploy technology to cross-check household characteristics across databases, the easier it will be. But again, I think only at the top end. So my cautionary note is that while targeting is very difficult at the bottom end, most of the research is also about the bottom end and not so much at the top. So I don't worry too much. But the one area where I would worry is in urban areas. My own sense is that the urban SECC is much weaker than the rural. But the other worry that I would have is that it has already now, it dates back to 2011 and it hasn't been updated. If you're going to have a UBI that is not universal, you're going to have a mechanism in place that updates characteristics of households over time. And where is that going to come from? How are you going to deal with questions of portability? So I think even there are the quasi-universality will impose constraints or questions in a dynamic sense, although the first time round identification using something like the SECC, at least in rural areas, is not going to be that difficult.
Thanks, Rinku. Saksham, we're out of time, but just very, very quickly, last parting question. When are we going to see this happen? Arvind has talked about J&K. He's talked about states taking this on in the first instance. What are you hearing in Delhi in terms of when we might actually see a pilot?
Well, I haven't heard much in terms of a pilot, but it seems like the idea is sort of filtering through the bureaucracy in different ways. So over the weekend, I think CA Subramanian announced that we would be having a sort of a quasi-UBI potentially implemented in the form of a DBT for farmers in Telangana and Karnataka. So I think one idea that they're exploring is whether, as a sort of a cure for agrarian distress, can you think about some sort of a short-term or possibly a long-term? I think they're quite worried about pulling out of this institution of an entitlement. Can you give, say, farmers about 8,000 or 10,000 rupees per acre or hectare and use that as a sort of a consumption boost for the medium term? Again, that's not UBI. It's a very sort of targeted I mean, it's essentially a cash transfer meant to produce a very specific outcome. But I think we're going to need at least, I advocate for a couple of districts, but I would love if an entire state were to take on sort of a short-term, even something longer than maybe 4 or 5 years, a pilot of actually taking this on and figuring that out. And I think the tricky part is not having sort of externally funded pilot, because I think that's the quick and easy way of sort of pulling something like this off. But I think those difficult choices would be illuminated best by the Indian state undertaking something like that.
So my recommendation is that you and Rinku and Justin get together and do your own pilot. I would love to see that, but I wanna cut it off there because everyone's been really gracious with their time. I want to thank Rinku and Justin for taking the time to read the report, to comment, and offer their own reflections. But Saksham, thank you for producing just a really comprehensive, but also intellectually rich document that I think answers a lot of questions, but also raises a bunch of other questions that we're going to continue to debate. And I think it's both a service to kind of the public discourse as well as to the government of India. And I hope that there are people in the bowels of the finance ministry and the Niti Aayog and the PMO and others that are listening to some of these and that consult you in the weeks and months to come, because I think there's really a lot of richness there to digest. So thanks to all of you. This conversation will exist on YouTube in the future, and I'll also send out the link via Twitter. And if you guys could do the same, that would be great. Thanks for joining us, and look forward to meeting in several months and discussing whether or not there's been any progress on this front. So thanks again to all of you.
Thanks, Milan.
Thank you. Bye.
Bye.